So I've broken down today's webinar into three main topics. First, we'll touch on background and industry challenges to kind of set us up for our second point, which will be some of the mitigation strategies that we've seen devices vendors, and specifically PC vendors, employing to mitigate some of that margin erosion and the revenue challenges. Lastly, we'll touch on the future of the industry and kind of what's to come. So again, my name is Ben Carbonneau. I'm a Senior Analyst with TBR's Devices and Data Team Practice, and I'm joined today by Alek and Ezra. To kick things off, I kind of want to go over some industry trends that have come to light over the last few years to several quarters. First, that is the increasing lifespan of PCs. HP says that the average life of a PC is around 3 to 5 years, and other sources say it's anywhere from 3 to 8 years. And that's really driven by two major factors. One, kind of the advent of the solid-state drive really increased the reliability and just the length that your hard drive is operable. And second is kind of a commoditized nature of the PC market. There's nothing really that's driving somebody to upgrade their PC that they got, say, a year or two ago to a new PC today, just because the differences in performance are not great. Next, devices vendors expanding their portfolio offerings. This is something that we've seen for quite a few years now, but definitely is more top of mind during this kind of stagnation of PC demand. And we're really seeing this mostly related to smart device offerings, kind of touching on collaboration and support features for hybrid workforces. We're also seeing new service related offerings, kind of the devices space, whether that's expansion of your DAS or PC as a service offerings, or just other standalone support and maintenance kind of offerings that are becoming available. Next, and this really started since the beginning of Apple's launch of the Apple Watch, and kind of continuing to gain momentum as they release new watches. Wearables has really gained a lot of popularity. Smartwatches in particular have become a form factor that really drives a lot of that smart device revenue. So I said on that previous bullet that we're seeing a lot of hybrid workforce and smart collaboration related smart devices being brought to market by players like the big three: Lenovo, Dell, and HP. But really, where the bulk of that smart device revenue is coming from is kind of from our other devices players like Apple and Samsung with their watch offerings. And another thing, I maybe should have said this at the beginning of the webcast, but really, kind of when I'm talking about TBR's devices market, I'm really talking about our benchmarked devices companies. So those include Apple, the big three Windows OEMs, Acer, Asus, Samsung, Amazon, and Microsoft. Lastly, these 2 points are kind of related. PCs and smartphones really have cemented themselves as necessities, and through the pandemic we saw tablets and wearables definitely become non-essential goods. I want to say at the beginning of the pandemic there was some battle, and I want to say it was really started a lot by Apple with their introduction of the iPad Pro, saying that it could replace a lot of what the PC could do. I think what we found through the pandemic, with so much hybrid work and learn from home things going on, is that tablets are really not a replacement for PCs for most workloads, and are really just a supplementary kind of non-essential good. Next, I want to kind of touch on two events. I kind of framed it on the previous slide, and I kind of want to touch on two events that really lead us to our main challenge of 2022, specifically in PC and kind of more broadly in the devices space. So first was the CPU shortage of 2018, which pushed into 2019. And that was really Intel failing to meet production targets that led to an industry-wide CPU shortage and gave the opportunity for PC vendors, as well as other vendors impacted by the shortage of silicon to increase their average revenue per unit, or we'll call it ARPUs today, which has positive gross margin impacts. So really, the crux of this is supply becomes constrained for PCs. In 1Q20, this is the second major event, really the main major event. The COVID-19 pandemic begins. So in March of 2020, it really became apparent, at least in the United States, that the COVID-19 pandemic was happening. And this led to further supply constraints. So it only exacerbated what the CPU shortage of 2018 kind of set up. And that's, because of, factory lockdowns and other logistics constraints. I think a lot of it was tied to quarantining, and on the logistics side of things, you guys might remember, there was a shortage of shipping containers for a while. So that also played a role. Second, and this is really kind of an important thing that the PC vendors really didn't forecast, was the spike in demand for PCs, which is driven by remote work and learn from home kind of initiatives. Again, this wasn't forecasted, so it further threw demand and supply out of balance. Again, this would just increase demand and further make it so demand is outpacing supply here. Again, something, whenever demand's outpacing supply, it's a good thing for margins, right? And it led to a few things. So order backlogs grew for PCs. So it kind of ties into the supply piece that I touched on at the beginning of the COVID bullet, but component and logistics costs rise. And, ultimately this leads to, elevated inventories in the factory and in the channel. That kind of sets us up for the big challenge that PC vendors are facing, today, and what really started in 2022, which is that demand spike. Much of that demand's been satisfied at this point. So what we're left with is a rather saturated PC market. As supply conditions improved, PC vendors were able to clear that backlog that had built up, and now, after they cleared that backlog, that demand spike, they were left with a surplus of goods. So, again, pandemic-driven demand becomes largely satisfied, and vendors become stuck with a whole bunch of inventory that they would have liked cleared. So what this led to, with all the vendors having this increased inventory, specifically for the inventory in the channel, these vendors really wanted to clear that as quickly as possible. And again, kind of tying it back to the commoditization of the PC market, there's not a lot of differentiation in terms of capabilities between the PCs to sell on. So as a last resort, all companies' kind of last resort is price competition, and that's what happened in the PC market, right? So we saw increased price competition, especially I think in consumer and SMB, where most of the major OEMs are pretty channel dependent. We definitely saw increased price competition there, and then I think especially also in the EMEA region, and this led to lower margins. So that's kind of the struggle that we're facing now, is weak demand, so not a lot of revenue, and decreasing margins, so even less margin dollars on that revenue. Now I want to get into kind of some of those mitigating strategies that we've seen, and I think we can kind of break this down into two pieces, which is really portfolio optimization and the reduction of costs and operating expenses. So I'll let my colleague Alek take this slide, and then I'll pick it up when we get to costs and OpEx kind of stuff.
Yeah, so perfect. So just as Ben was saying, as we kind of start off with those mitigation strategies, we're sort of kind of looking at the product side of that in terms of portfolio optimization. So first of all, what's going to be really important here is driving more sales of kind of higher margin offerings in the devices market. So this is going to include things like device as a service offerings and PC services. where vendors are going to be increasingly focused on driving those higher attach rates for support and maintenance services, especially. And then another area that we're going to be looking at here is the growing market for peripherals and for smart collaboration solutions. So peripherals are going to be another thing that are driven largely through attach rates, though there are also vendors that are working to kind of capture the interest in the market for hybrid work and gaming solutions, specifically in the peripheral space. And then the other thing is that in terms of hybrid work, so vendors are really expanding those kind of smart device portfolios, specifically targeting the needs of a hybrid workforce, which include things like improved features for video conferencing and collaboration. And then another aspect of portfolio optimization we're going to be looking at here is vendors needing to take advantage of the breadth of their portfolios, not only on the strictly devices side, but also in terms of data center and cloud offerings, as well as subscription services. So first of all, for example, both Dell and Lenovo are working to leverage and take advantage of the relative strength of the IT infrastructure market to sort of drive their top lines and expand margins. We have storage being a particularly strong growth driver in that area right now. Other vendors in our benchmark, including primarily Microsoft and Amazon, can also work to sort of lean on the strength of their cloud businesses to drive revenue and increase profitability. And then finally, in terms of subscription services, what we're primarily looking at is vendors like Apple and HP who are working to kind of expand those subscription services, where Apple is really taking advantage of its large install base, kind of loyal following to sell services like, Apple Music, Apple TV Plus, and then on HP's part, they're really working to kind of extend the subscription-based purchasing model to a lot of their portfolio, kind of starting with their Instant Ink offering, which has seen a lot of success. And then just in terms of that, so all of this is going to kind of involve a certain level of R&D investment on the part of the vendors, which we're just going to continue to see in the coming quarters.
Great. Thanks for that, Alek. So this slide here on another mitigation strategy, kind of a wide, all-encompassing strategy, right? Operational efficiency and cost reduction. It really builds off a bit of what Alek was just saying there. So one of the first strategies that we've seen is a reallocation of resource spending, and that's really just the scaling of resources, away from PC and devices businesses, potentially toward other parts of the portfolio. So Alek mentioned that, Dell and Lenovo, they have those infrastructure businesses. We've seen, at least Lenovo's definitely, their SG&A just really decrease very, very quickly. And we know that was coming mostly from their devices side of the business. So there might be some kind of shifting of resources, say one, S&M resource could be moved from, for example, Dell's client business to their infrastructure business. But of course, if that's not possible, the reduction in resource spend is really going to come from a rebalancing of headcount. So again, we've seen Lenovo kind of rebalance its SG&A headcount around their devices business. We know that Dell is also laying off employees, and we heard that HP is also laying off employees. But I think one important point of differentiation, between Dell and Lenovo's layoffs and HP's layoffs, I guess it really goes back to their other businesses. But unlike Lenovo and Dell, HP doesn't have an infrastructure business. Instead, the other half of their portfolio is in print, right? Which is a relatively stagnant market, definitely not growing like the infrastructure market. So HP doesn't have the luxury to kind of rely on their infrastructure business for margin. So instead, they're kind of always in this cost-cutting mode where, every 3 or 4 years, we hear about a new plan that HP is working on to reduce its structural costs. So there's a little bit of differentiation there. I don't know that HP may have wouldn't have laid off these employees if these weren't the circumstances or not. I can't speak to that, but it definitely seems like Dell and Lenovo's layoffs are definitely largely as a result of this market saturation, this low demand in PC. The next two bullets, they kind of go together as they really have to do with corporate budget constraints, but we're see companies reducing their variable spend and their spend on outside services. So, also spend on travel. But, when we think variable spend, that's mostly sales commissions and then other, certain discretionary channel partner incentives. Whereas on that outside services piece, it's more has to do with, consulting, maybe some HRM or CRM tools, kind of reducing the spend there. In light of all this, go-to-market strategy is super important, right? We know that, from what I was saying earlier, there is that little bit of excess channel inventory that's really trying to be cleared. So these companies that work with these channel partners really need to, work tightly and incentivize the channel partners to move that excess inventory. However, I think we're really, coming out of that channel inventory glut situation where now we're kind of more at normalized levels, or at least levels that companies are more comfortable with. And certainly by the second half of this year, that will be the case. So really on the go-to-market end, having to do with channel partners, the investment incentives really has to do with the upping attached sales. So that's like vendor services and peripherals. And it's important to note, I think a lot of these channel partners offer their own support and maintenance services. But what I'm talking about here is services, that are provided by the OEM who the channel partner is selling the PC for. So really trying to incentivize those partners to attach more services and peripherals, at the point of PC sale. Lastly, kind of like an optimization of the supply chain. I know that just from a prior earnings call, I want to say 2 quarters ago, HP talked about how it really had to increase the number of SKUs that it had just due to a lot of component shortages. So they're receiving a lot of mismatched componentry sets, and that kind of necessitated that they have, say, one laptop. They have 2 versions of the single laptop, maybe one with the Intel processor, maybe one with AMD, right? Or things like that. That's just the easy example. So reducing those kind of SKUs and then kind of branching off that, to cost optimize the supply chain. It's really like a reduction of the number of components used in offerings. I think the classic example is if a company's portfolio has 10 PCs and they all use different screws versus if a company has 10 PCs and they all use the same screws. Clearly, from a cost perspective, it is going to cost less money to use the single screw. So kind of reducing the number of components. Again, that's just kind of the classic example, but really leaks over to, a lot of other componentry that goes into these machines. Another thing, keeping on this HP note that we see, and I'm sure it's not just HP, they were just explicit in talking about it in one of their earnings calls. We do know that there's a lot of forecasting of component prices going on, and that's mainly for the purpose of potential strategic buys. I think HP talked about how their inventory was up, but that was, that was part of their strategy and a strategic buy where they saw the price of the component right now, component prices largely are decreasing. They saw maybe that price is going to be more expensive in the future. So they locked in at that lower price, bought that inventory, and that's going to satisfy, some of their needs for current and future offerings. Lastly, just before we, jump to the next slide here, this is just a kind of a thought of my own, but when it comes to supply chain optimization, I think there's really 2 kind of ways to optimize the supply chain, right? So you can optimize the supply chain for costs, which is what we're doing now and what we're seeing now with PC vendors. you can also optimize your supply chain for resiliency. And that was really like top of mind for these vendors. After the onset of COVID, with all these supply chain disruptions, it was talked about ad nauseum the efforts that the companies are going to ensure resiliency of their supply chain. But now, as we see, costs being more of a factor, with supply chain conditions really quite improved from where they were, I think it'll be interesting kind of maybe the next time we have a COVID or, a similar situation, we'll see how resilient those supply chains are, versus kind of that cost savings. I think what I'm trying to say is it's trade-off, in my head between cost optimization of the supply chain and resiliency of the supply chain. So that's something to look forward to, see in the future. I'll flip to slide here, what comes next. So, going through the rest of the year, macroeconomic uncertainties, they will persist. So we've all heard this term macroeconomic uncertainties way too much in the last few quarters, but what I'm talking about here is high inflation, high interest rates, foreign exchange headwinds, geopolitical friction, whether that's, Ukraine, Russia, or U.S., China, Brexit definitely having an impact on, the UK and maybe the EU more broadly. And then also, in the U.S., these kind of debt ceiling concerns, right? So these factors are all detractors from demand, right? And I think we see it in consumer sentiment. But really, if these factors worsen, especially, the looming debt ceiling, if the U.S. does default on its debt, I believe we're definitely more likely for a recession. And in that case, we'll definitely see a lot lower demand from both consumer and commercial entities, potentially more layoffs, and really just, doubling down on those kind of mitigation strategies that we talked about on the prior slides. Second, vendors continue to draw down that excess channel inventory. Again, I touched on this a couple slides ago, but really I think we're over the hump for the most part when it comes to channel inventory, and definitely by the second half of the year, channel inventory levels should be back to pre-pandemic levels, or at least where vendors are more comfortable seeing them. And for these last few bullets on the slide, I'll kick it to Alex to wrap it up, or Alek.
Yeah, absolutely. So I think we've kind of touched on this just a little bit, but because of the increasing shift in product mix with vendors towards more premium offerings, we're going to see the PC ARPUs, those average revenue per unit, we're going to see that stabilize at a level higher than before the pandemic, where customers are going to be more willing to pay more for PCs with richer configurations. And then kind of coming off the back of that, that's also going to drive margin expansion, where we're going to see those PC margins also level out somewhere higher than before the pandemic, not necessarily related to any price shift, but more of the premium mix. And then finally, as we're sort of discussing when we're going to be seeing that rebound in PC demand, this is going to depend on a couple of different factors that are also kind of already been threaded through this webcast. So first of all, obviously it's going to be kind of a gradual comeback, as individuals' priorities when they purchase their current machine are going to be different, what they're looking for in their new machine, so it won't, come all in one kind of like rising tide. But the other thing is this timing is also going to be impacted by those macroeconomic uncertainties we just mentioned, which are going to be, inflation, et cetera, et cetera. And then again, as Ben sort of touched on, if we do end up sliding into a recession, that's certainly going to negatively impact this and sort of push that rebound down the line as people keep holding off purchasing new machines.
Great, thanks, Alek. So we'll move on to our last slide here. Most of this webinar has really been kind of delivered with a negative tone, right? Just considering what's going on in the market. So I'd like to end it with kind of a light at the end of the tunnel view. So what could accelerate this device's refresh cycle? I spoke earlier that, the average lifespan of a PC is somewhere between 3 to 8 years. Well, for, PC vendors, obviously they'd like to see that those devices be replaced closer to the 3 years and 8 years. So what could accelerate the device's refresh? And that's really comes down to innovations. So I think we talked about the commoditization of the PC market, how there's really not much that's driving consumers or, even commercial entities to refresh their laptops that they maybe bought shortly before the current times, right? But a few innovations, or I'll touch on a couple right now. And, the first one's going to be a killer app. So a killer app, and this is for PC, really what I'm envisioning here, it's definitely tied to AI. In the last 6 months, but especially since, ChatGPT came out and everything, AI has proliferated. We know that AI workloads are increasing, and we also know that most of those workloads are run in the data center. But, more and more, we're seeing, PCs and smartphones being brought to market that could support these AI workloads, or some of these AI workloads, and there really needs to be an application tied in that would really stimulate the adoption of, new devices to bump up that refresh cycle. And some are kind of like, if endpoint devices become more suitable for that growing number of AI workloads, then I think we'll see, individuals and organizations more likely to refresh their machines, earlier rather than later. Second is, cellularly connected PCs. So connected PCs have been in existence for a while now, but they comprise a very small portion of the overall PC market. I think we all know that, 5G networks continue to expand pretty rapidly, and it's quite a focus, 5G edge compute, and, just the expansion of 5G networks in general. We could see that drive, the refresh cycle a little quicker if maybe more PCs are brought to market with capabilities to let them connect cellularly to networks. Whether that happens or not, I guess really kind of has to do with, the rollout of 5G. Whether, I guess the distributed workforces are becoming more and more distributed now. So maybe that could be a driving factor toward these connected PCs. Really, it'll have to more do with the mobile workloads, mobile workers, and things of that nature. And I'll throw it again to Alek to wrap up this slide before we open it up to questions and answers.
Perfect. Yeah. So moving away from just strictly looking at PC innovations, another thing that's going to be driving sort of revenue growth in the devices market is going to be innovations on the smartphone side. So right now, the big thing is new form factors for smartphones. The foldable model is kind of the most notable at this point, with Samsung entering the space with the Z Flip and the Z Fold. And then we also have the Google Pixel Fold. And then we're just going to keep seeing kind of innovation in this space as companies are looking to increasingly differentiate their smartphone offerings to try to drive that upgrade cycle. And then finally, we have our smart devices. So in terms of that, a lot of the innovation in that space is going to be happening in the wearables category, with things like especially the Apple Watch, and then there's also the Samsung Galaxy Watch. I believe Ben mentioned these earlier in the webcast. But a lot of the innovation in this space is going to be focused on sort of building out and increasing the number of those health and safety related features that are really useful on those wearable devices. So that's stuff like more sensors for monitoring health, and then Apple has the whole crash detection thing. So we're just going to keep seeing more and more innovation in those sorts of features.
Yeah, great. Just to summarize things today, you know, the industry is really kind of in a slump, right? Demand's really low, but the driving factor of that is the saturation of the market, and currently really is not the that those macroeconomic uncertainty pieces. We see commercial collapsing after consumer collapsed earlier with respect to PC demand, but a lot of that has to do with definitely does have to do with tightening of corporate budgets, but it also has to do with these organizations stocking up on devices when they could during that high demand spike. So largely that demand satisfied. Again, we'll see PC vendors, depending on the breadth of their portfolio, use different strategies and kind of really try to optimize their resource allocation to maintain their margins. Again, there's factors that could push back the refresh cycle. There's factors that could move it forward. But today, I don't think any PC vendors are banking on a killer app being developed and giving guidance based on that, right? So I think right now we're kind of in a mode of just waiting to see what comes out of 2023. How does the debt ceiling thing play out? Brexit, things like that. We're kind of in a period of stagnation and waiting for the refresh cycle. All right, so I see a question from Cindy here, and it is, how does recent return to office mandates affect cellularly connected PCs and PCs and peripherals in general? Alek, if you want to take the PCs and peripherals piece, I can talk about cellular, if that works for you. So I would say that return to office mandates, I'm not sure. We don't have that modeled numbers for cellular connectivity to PCs. I would say that it is only a detracting factor. I think the cellular connected PC would have a more of a value prop, with remote work. So a mandated return to the office, I think, kind of detracts from that, given that if they're in the office, they might as well just use that secure network when they're in the office. Maybe I can just touch on the next one too, actually. So for return to office PCs and peripherals in general, I think it doesn't really, the impact on PCs is less so than it is on peripherals. Peripherals definitely. So if a company had sold or lost its peripherals since last time people were in office, it's definitely possible and probable that they're replacing those now. However, on the PC end of things, I believe most of those PCs have been bought. I know we're seeing trends of I think they call it BYOD, bring your own device to work. So I know that's another thing that's going on currently. So I think really a lot of those it's more of an impact on peripherals and less so on PCs in general. And I see another question here from Lisa. So this question is, does TBR have any data on the costs associated with holding on to the device longer, 8 years instead of 5? So we don't have data on that. This is something I think that, is maybe an area of exploration for TBR in the future. It's kind of more around the life of devices and also the second life, with right to repair and everything going on in Europe. But definitely something interesting to look at. I think that this whole lifespan of the PC is it gets a little bit nullified if we think about PC as a service or device as a service offerings, right? Where they're obviously replacing that hardware as well as delivering the managed services. So I think that kind of takes away from any cost associated with holding a device longer. But of course, to hold on to a device longer, it's likely that a company would buy maybe more extended warranties or extend their support services contracts. where it's less of a capital investment than buying a whole new fleet of laptops. But with the financing options that are available today, it would really be we'd have to go pretty deep into, I think, pricing to figure out the cost associated with that. I don't know if you had anything to add on that, Alek or Ezra.
Not really. This isn't a study that we've had the opportunity to do. It is challenging because the data are not inherent in any of the regularly reported data in any of our regular work. It's an area we'd like to explore. We are definitely seeing an expansion of the length of the optional length of warranties. So presumably customers are requesting and vendors are providing extended warranties, and it would be an interesting question to see what the total effect on the finances of a vendor would be if they end up with longer service contracts and longer life cycles. And in a lot of ways, that's the direction that, for instance, the automobile industry has gone. Cars last longer every single quarter. They just always report that. Are there any other questions? Let me add one more thing to the use of the client device for AI. This is of a lot of interest because the costs go way down and because of privacy concerns. We also know that Microsoft is aggressively looking at ways to leverage AI, and we can presume that, and Google is as well, with less of a focus on the office. So we are expecting there to be applications that can be run on a PC, can actually do training as well as inference on a PC using AI resources, and that they will probably perform better if the PC has AI silicon built in. All PCs do have some, in that they have graphics cards, but a larger AI capacity might lead to improvement in that performance, which in turn would lead to pressure for a refresh cycle.